Hi, welcome to today's post-market analysis. This is the post-market analysis for the price action of the 3rd of February 2022, and Nifty fell steeply today. Of course, it was not suggested this kind of a fall given the price action of yesterday, but given FII selling, nothing is impossible in the market. So let's see how the day opened today. See, the day opened with this red candle in Nifty, but this was neither bearish nor bullish. You can see the wick on the bottom. This was a very big wick, and this candle was taking support at the CPR. You can see this. This is the CPR. This entire range is the CPR. Okay, and candles were taking support at the CPR initially. For the first 4 candles, the CPR was not broken, and the CPR was broken by this 4th candle, and after that you can see the wick here that was also broken by the 5th candle here. And usually in my strategy video I have said that you should go short after the CPR is broken on the downside, but now here you can see that this first candle itself suggests that there are buyers here at the base. So that candle has wick up to this level. Okay, that was outside the CPR. The CPR is here. These 3 lines are the CPR, and this low was here. So that low was broken by the 5th candle. You can see this here. The low was broken here, but still, as I've already said in that video, that the price, whenever it breaks CPR, you should not take that trade whenever you see that there are candles or wicks on the left side of that breakout candle. So you can see that on the left side the wick was present here. So on such days you should not take a trade right out of CPR. And even then, even after the price had broken out of CPR, you could see that there was demand zone here that was coming from the February 2nd, that was yesterday. So the demand zone being there, anyway, if this was the candle that was breaking out, then had this wick not been here, I'll just delete all this. Had this wick not been here and you would not have had this wick here, you would have seen that this particular candle broke out of the CPR. Then it was okay to have your SL on the top and you could have shorted here, and then you could have taken your target back at the previous day low. You can see the previous day low marked here. You can see the DL written here. Actually it is PDL, the previous day low. So that would have been a good trade, but still the RR would not have been very good, because you can see the SL would have been this big and this would have been the target. So it was not exactly 1:2. But then anyway, we had this demand zone coming from yesterday, which was broken by this candle here, and then price broke down. It bounced again, took resistance. I've always said in every video that once demand zone or supply zone, whatever is broken, its polarity changes. So demand zone is what? It is a support, and once it is broken here, it acts as a resistance. So exactly that was what happened, and then price crashed. So Nifty today broke this demand zone. It also broke this demand zone that we had marked, and it came and settled into the virgin CPR which we had marked coming from yesterday. Now this virgin CPR has a red candle inside it, so it is a pretty subjective thing whether you should mark it for tomorrow or not. I usually do not keep the virgin CPR for the next day once a candle is formed inside the virgin CPR. So let's see levels for tomorrow. We can delete these levels now, we don't need them. So just have to take a look at some historical price action. Now that we have this small candle inside the virgin CPR, we don't, technically it is not active anymore because there is a candle inside it, but you can see that this candle here has given some support. It has given some sort of support to price, isn't it? So what you can now do is you can place a line at that level like this here at the low of this candlestick, and you can keep that support ready. Obviously you have DL also here, the previous day low, that is just today's low, but you can keep that level ready, and you can see that price has reacted at that level at this point here as well as this point here. So price has taken support at that level. and again third time here. So we might be able to see some reaction at that level, so we will keep that level ready for tomorrow. And you can see that this is the CPR for tomorrow. Again, it's a fair size CPR, it's not a narrow CPR, it's wider than today. We can adjust this level a little bit at this level. So price was taking support at this area, then this candle broke that support, and then resistance was given at this area. So it will be an important area for tomorrow. And of course the PDH tomorrow, that is today's high, will act as a strong supply zone. And rest of the levels we already have marked prior. So this is the supply zone coming from the 20th of January. So we will mark and extend that area forward. That's a very simple thing to do, just extend that box. And the demand zone from Feb 1st as well as the Virgin CPR from January 31st, we can just extend it like this. And we also have a Virgin CPR from the January 28th. So we will just extend all these levels forward, and I will update these levels on Twitter, so you can check them out from there. Also, on this publish button that you can see here, that is this button, you can see on the top right corner, see I'm marking this. This publish button does not allow me to publish charts on the 5-minute interval. So that is not allowed publicly, but I can post them privately on the TradingView platform. But what I will do is I will shift over to the 15-minute time frame, and I will mark my levels there, and henceforth I'll be posting those levels on the Twitter channel also, so that you can pick up those levels from there. Obviously those levels are coming from a higher time frame, so the lower time frame will respect the higher time frame definitely, because the lower time frame follows the higher time frame. And so you can pick up those levels, those charts directly from Twitter, and if you click on them, then you can have those charts ready for yourself. So let's take a look at Bank Nifty now. This is Bank Nifty's price action. It has completely taken out the entire movement of yesterday. It has fallen almost the same equal number of points that it had gained yesterday. And let's see what we can analyze here. See, the day opened with this candle, and it was not a purely bullish candle, but this was a strong wick on the bottom as well as a average body. And you can see a very typical and a very famous pattern here. See, CPR is wide. Okay, this is the CPR. I'll just mark the CPR for you, and I'll write in here, this is the CPR. Okay, now the first candle, as you can see, is taking support here at the CPR. Okay, so when price hit the previous day high, this was the previous day high. Okay, and at the previous day high, price had taken resistance, you can see that. So you know that there are sellers on the top here. And when price opened with the green candle, it shot up to the previous day high, up to here. It took resistance and fell right up to the central pivot. And from here, it spent some time inside the CPR, then bounced again and went to the top of the day, the opening candle of the day. Now that is the high of the same day. When price reached the high of the same day, that is today, it made this candle here, which is a sign of absolute bearishness. You can see that it is a pin bar. Now this kind of a sign is a very strong bearish signal, and it has made it at exactly the resistance that yesterday we had found out. So this is the strong resistance. You have sellers on the top here. Okay, so you can also call it a supply zone. Why? Because price had fallen from here up to this point, then made a base here, this entire area, it made a base, and within this zone it kept trading today, and then it shot up, went to the same area here, and then at the same level it made this bearish pin bar. You can see this pin bar here. So whenever you see a bearishness here, you know that the sellers sitting on the top here are not going to allow price to break out of that zone. So they are strong sellers there, and then you can go ahead and short this candle here, and you can take your profit back at the central pivot. Why? Because this is the previous swing low. you can see that price had taken a bounce from there. So you should take your profit back at the CPR. You should not wait for CPR to be broken. It does not matter what happened here and price broke the CPR. It doesn't matter. Once you take your profit, you should be out of the trade. It doesn't matter where the market goes from there. Even if the market from here would have crashed even further, even 1,000 points from there, it is none of your business. You should get out of the trade where you see logic telling you that you should get out. So what was logic telling you? That price had taken a swing from here, and if you short this place, then you better get out at the same place, which was the central pivot, which will again act as a strong support. So that was one place where you could have traded. It is a double top pattern and usually does not happen. It's a very rare pattern, but yes, when it happens, you should know that if you have a supply zone coming from the previous day or a strong resistance from the previous day, and again the opening candle takes resistance at the same place, then you know that it is a strong supply zone, and you know that you can confidently short that candle. Okay, so that was the price action for today. Let us see how we should go ahead marking the levels. Now you obviously know that we have this important area coming from yesterday. So what you should do, you should mark out this area and you should make a zone there. So you should not wait to see if price actually breaks that area or not, or you should not presume that the next day time price comes there, it will break it, because whenever an area is retested multiple times, it is broken. Nothing like that. You should keep that level ready. Whether broken or not will be seen on that particular day. Okay, so you have that area, we have that zone marked coming from yesterday. In fact, you can also switch that, pull that line down a little bit, and you can mark it to this area also. See here, you can keep your line and you can pull the box down up to this area. So that is also fine, marking the levels like that. And you have the CPR here. Rest of the levels will remain the same. We have a demand zone which we have marked already. This is the area, this is the demand zone that we have marked, coming from this big green candle from the 2nd of February. So keep that area marked. CPR again tomorrow is fairly wide, right? So tomorrow again CPR is showing us that it might be a sideways day like it was today in Bank Nifty. Whenever CPR is wide, it suggests of a sideways day, and whenever CPR is narrow, it suggests of a narrow day. Does that mean that that is what happens every time? No, it doesn't happen every time. It is something that you should always take with a probability mindset. It is definitely not that every time it will work, and definitely not that every time you see that there is a big green candle at a support and you know that it is a supply or a demand zone rather, you should go long there. Or if you see a big red candle at a resistance or a supply zone, you should go and short it. No, that is not what happens. You should see what sort of price action is present at that place, and you should see what historical price action has shown you, and only then from that point you should take it forward. I find this one area also which is important here. I could have marked this zone also here, this one, but since it is within the CPR, I am not marking it. Okay, so don't make the charts muddy. I keep telling you all the time, you don't have to keep marking unnecessary levels, since this level here has provided support here, and then here again, and then once it was broken at this area, it has provided resistance with this pin bar. So that area will now act as an important area where price action will be seen. So whenever you see that price goes there, it might take resistance and fall again, and when goes there, then it might break out, then it will act as support again. So such things may happen, but since we have the CPR already plotted in that same area, usually you should not make your life more difficult for yourself than it already is while trading, and don't mark too many unnecessary levels on the chart. So I personally would not mark it. If you want and you are comfortable, then please go ahead and mark that area also, or that level also. So that is the price action analysis for today. That is the 3rd of February and the important levels of 4th of February. I will also post these charts on Twitter. And thank you for watching this video. If you have liked it, please hit the like button and also subscribe to the channel and hit the bell icon so you're notified every time I post a new video. Thank you. Have a great day.